Coming up on today's Elevate Your Wealth, we're going to talk about damage control, helping clients navigate scams and data leaks. Inflation is weighing heavily on retirees' finances and psyches. And then we're going to be talking about why so many retirees are filing early for their Social Security benefits. That and so much more on this week's episode of Elevate Your Wealth.
And now, Elevate Your Wealth with Mark Stimpson and Casey Elkins.
Welcome into Elevate Your Wealth. Your hosts are Mark Stimpson and Casey Elkins. You can find them at Elevated Financial Management right here in Seattle. Over 42 years combined experience between these two. They are certified financial fiduciaries, and what do? Every day they're helping their clients get ready for retirement. I'm Morgan Patrick. My pleasure to go back and forth with the advisors on the latest when it comes to retirement planning. And we are going to get into some articles today, guys. But before we do that, as we always do, how was the week? Casey, we'll start with you.
Oh, it's been great. We've been really busy. Actually, Mark and I were in Mexico last week, and we talk about this on the show fairly frequently. It's nice. We get to go on trips and meet up with other advisors from across the country, and we share ideas. We talk about how we can get better, and we talk about what we see coming and things that can be done to hopefully serve our clients better and things like that. So we always walk away with a few ideas. I'll tell you what, right now, one of the biggest topics of conversation is AI and how that's going to affect not only the world, but specifically our industry, of course. I'll say this, I wouldn't think that we're all too concerned about AI taking our jobs per se, right, because what we do is so personalized, right? It's so personalized that I don't think AI is there yet, and I don't think it's going to be, because finances are a very personal conversation. It's a conversation that a lot of times families don't have with each other, best friends don't have with each other. And so, we recognize, Mark, myself, the rest of our team, recognize that we're in a privileged position to even have these conversations with the folks that we get to. And we're thankful for the trust that they place there. But we're not concerned about AI in that regard. What I will say is, we're actually really excited about artificial intelligence and how it can help us be more efficient, because what that really does is it allows us to spend more time actually working with clients, actually doing things that matter to them. And we can let AI kind of take care of some of the more menial tasks, right? Even down to note taking or summarizing a conversation or something like that. There's a lot of value there. So that's really exciting. That's one of our big takeaways from our most recent trip, along with a sunburn or two from the Mexican sun is hot. But no, we had a really nice time. Is there anything you'd add to that, Mark?
Yeah, no, like Casey mentioned, Casey got the sunburn. I didn't. He got it pretty bad.
Got roasted and toasted both sides.
He did too. I actually went out and did a little deep sea fishing, so that was kind of fun. Did something a little different, and we caught some fish, so that was fun. But again, being able to socialize and mingle with other financial professionals that are doing really wonderful things in their practices,
right?
And again, talking about things that we're like, that is a really good idea. So we just really appreciate, even in social type settings like this, we got some great ideas when we were down there. So we want to, again, just improve our practice and bring things to the table that our clients are not getting anywhere else.
Well, when you're mingling with the best of the best and you're in that group, you're gonna learn. It's you find out what's going on in other parts of the country and what other advisors are doing, and then also you're offering up what you're doing in Seattle. So it's continuing education is what it is.
Yeah,
and,
exactly.
Just fantastic to keep on top of that. And one of the things that I love about this show is you guys go out and find the latest news that we need to be discussing when it comes to retirement planning. So damage control, the first article you've thrown at me today is damage control, helping clients navigate scams and data leaks. It seems like we have a data leak story every week, and also the scam side of this thing, especially if you're a little bit older. It just seems like your phone rings constantly. You're getting text messages with links. You're getting emails with links. Don't click on it.
Yeah, don't click on it. Absolutely. You're absolutely right. And I maybe we should preface it this way. This is something that we wouldn't normally talk about on a financial radio show, right? But this is so prevalent, and it's really crossed over into the financial world in a lot of ways. Obviously, the reason people do these types of scams to begin with is because of their own financial reasons. But what really brings it to attention for us is that even with some of the bigger names like Charles Schwab, we've had clients, because we use Charles Schwab, and we've had clients that have gotten spam or scam emails, I should say, that look like they're from Charles Schwab. Now, they're not, right? They are not, but they're trying to get you to click on something. They're trying to get you to input your social security number or to answer some kind of question or do something. And, we just thought it was really valuable to talk about this because our practice is not just focused on the finances of it all. That is really important. But we're also really focused on how it impacts our clients' lives and the things that come up in their lives and what can be done to make that retirement journey funner and more successful and more stress-free, those kinds of things. And so, these types of scams are things that you need to watch out for. There was a couple interesting things here. It says that 44% of U.S. adults have had their information compromised more than once. So not just 44 total, but 44 have had it compromised more than once. And so this is just becoming more and more prevalent. And, I'll say, kind of bringing it back to artificial intelligence like we were talking about, that makes it even more scarier, right? Because, AI can take your voice and mimic it or something like that, right? So, it's concerning, and that's why we want to talk about this, just to kind of bring that awareness and make sure people are doing what they can to protect themselves.
Yeah, so I was thinking it gave some really cool steps that we can take.
Okay.
The first step that we need to understand is if you have had some of your information breached, you got to identify what information they targeted, right? That's the first thing that you do. Find out what information they got. But I love these steps. There's 4 specific points for clients who have been compromised. Number 1, take advantage of any free monitoring services that are offered. A lot of these firms are providing free service, and they'll monitor your credit report with you and make sure that if suspicious things start to happen, you're going to be notified about that. The second one is a big one. Place a freeze on your credit to limit anyone from opening unauthorized accounts. The problem there is if you do put a freeze and you go to want to maybe a loan for a child or something, that's going to create an issue in and of itself that you've got to remove the freeze. But it is going to protect you if you have been compromised. The third, change your password frequently and enable 2-factor authentication where possible. Casey got me working on this several years back, but I didn't take care of my passwords like I should have. And Casey, I know, is laughing inside about that one.
Not just inside.
No, I mean, but Mark, you're not alone. I mean,
exactly.
there are a lot of us that don't even remember our passwords.
Yeah,
they're automatically saved, and so you need to have you need to know where they are, how to access them, and obviously routinely make those changes. But you got to make notes of when you change the
That's it.
Well, that's just it. That's why you have to have a system to do that, because if you don't write it down immediately, you're going to forget that you even changed it, right? But I do like the 2-way authentication, right? 2-factor. I love getting a text message to make sure that it is me that's going into that account. So that's something I think we should all keep in mind. And then, of course, the last one is something you'd think we would all should be doing, but self-monitor your credit and bank statements and look for any unknown activity. Sometimes I'm lazy about looking at statements, myself. I don't even look at paper statements anymore at all. So again, we want to be diligent about this because this is a real threat, and billions of dollars every year is basically being scammed away from people, and the largest and most susceptible group we know of are seniors, right?
Yeah.
We know that.
No, it's true. That really is the case. And so what else can you do, right? Kind of trying to stay ahead of the scammers. This was something that was brought out in the article. So there was 3 points that it discussed. It says, 1, you got to be weary of unexpected calls, texts, or emails alerting you to an issue. I get those all the time. I get some of the craziest ones saying, "Oh, your business has not filed its report. Click here." And I'm like, "What? How is this happening so frequently? It just seems to be nonstop." I even get them about a crypto account or about this bank account or something. And the thing of it is, a lot of them don't actually know that you have that type of account, right? They're just fishing, right? They're just hoping that they're going to get something, that they say something that triggers you. The next one is a sense of urgency, right? If they're telling you that there's a sense of urgency, that's a concern, or a request for payment in an unusual way. So, I'll say we haven't been talking about finance so far yet this morning, but our point here really is that if you are aware and understand what's going on, that can really help you be prepared. So, we'll talk about what we normally do, which is if you'd like to have a financial plan, this is your opportunity to do it, right? And these are the type of things that we bring to the table for our clients, is helping them be prepared for whatever comes their way. So that's income, that's taxes, that's Social Security, Medicare, all those concerns that you have as you approach retirement. Don't hesitate. Pick up the phone. Give us a shout.
This is your opportunity. Again, this is a complimentary appointment, meaning you leave the checkbook at home. You can do this on the phone. You can do it virtually with the Zoom call. You can come in person. But again, a complimentary appointment awaits. 866-668-3625. That's 866-668-3625. And again, just be careful out there. It's your money. You want to hold on to it, and there are a lot of people out there trying to get it. So be aware of the scams that are out there, but also have that retirement plan, have that fiduciary firm with you as a partner as you move to and through retirement. Again, call the number, grab one of these appointments, come in and talk about your retirement situation. 866-668-3625. That's 866-668-3625. When we return, another article caught our attention: inflation weighing heavily on retirees' finances and their psyches. That's coming up next, right here on Elevate Your Wealth. We are back on Elevate Your Wealth. Your hosts, Mark Stimpson and Casey Elkins. You can find them right here in Seattle. Elevated Financial Management, the power behind this program. Mark and Casey combined have 42 plus years experience in the retirement planning business, helping their clients get ready for retirement. They're certified financial fiduciaries, and it's all about having the plan, being ready, being proactive, not reactive when it comes to your retirement. I'm Morgan Patrick. My pleasure to jump on and talk retirement with the fellas each and every week. And we give you an opportunity to take action on your own behalf, grabbing a complimentary appointment at any time during the show. If you've got any questions about where you are in your process, maybe you're just sitting on a portfolio, or maybe you need a second opinion, call the number, secure an appointment, 866-668-3625. And no obligation means you're not agreeing to become a client, and they're not agreeing to take you as a client. This is an opportunity to test drive Elevated Financial Management, 866-668-3625. So back to the articles, guys. Inflation weighing heavily on retirees and their finances, but also the mental side of this. I mean, people are worried. What's the number one fear, guys? Running out of money in retirement? Well, if things are more expensive, the chances of that go up.
Yeah, exactly. It's funny you mentioned that, Morgan, because we article, maybe a year ago was retirees are more scared, like you mentioned, of running out of money than they are of dying. Okay, so again, and inflation just exacerbates that. It just makes it much worse, right? And we know inflation is weighing heavily on everybody's mind. I know every time I go to a gas station up here in Washington, everybody knows I'm so tired of $4.50, $5 gallon gas. I mean, when is it going to stop? And so it puts a lot of pressure, and a lot of people, I love this, I don't want to say I love this point, but 27% or so are spending more than an hour or more a day worrying about their money, let alone, those that are losing sleep because of this. Nobody's 100% sure now how tariffs that have been impacted are going to really drive inflation possibly skyward and make it even skyrocket even more. So this is something we just want our listeners to know. We understand it. We believe a plan is critical to address that. That's why we have a column that shows inflation
Right.
in there, because if you don't have that in there in a written plan, you're probably going to be in a lot of trouble.
Yeah, I absolutely agree with that. That's why we do include that, because at the end of the day, we're talking about fears and concerns here. What this really boils down to is people are anxious, right? I mean, we see that, and we probably live in a more anxious time than we've ever lived in, just in general, right? But especially when it comes to finances, because that anxiety, right, if we want to maybe use a different term for it, is really fear of the unknown. That's what causes anxieties. You don't know what to expect. If you knew what to expect, probably wouldn't be so upsetting, right? Yeah. And so with the inflation, I think that's the concern that people have. They understand the impact of inflation and how challenging that might be, but how much is inflation going to be, and how much does that affect my income in retirement? And how much does that mean that I can't do, that I plan to do, that I wanted to do, that I've been saving to do, right? Those kinds of things. And so again, that's where the plan comes in, is to help account for that inflation as much as possible, right? I mean, we don't put plans together that account for 10% average inflation, because I got news for you. Nobody's got enough money to retire at 10%
Right.
annual inflation, right?
It won't happen.
But we need to build something in, right? And so we do. And that's really the key, is all those things that are swirling around in your mind that keep you up, that wake you up in the middle of the night, that give you those concerns, those anxieties, those can all be answered with a plan, right? That's why we always come back to that, because that's what allows you to be comfortable. That's what allows you to answer those questions, the unknowns that you feel uncomfortable about, is by putting something in place that at least gives you a starting point, because no plan is perfect, right? We might plan for 3% inflation and there's 5%. Well, then that's not great. But maybe we plan for 2.5% and it's actually only 2%, and so that's good, right? So, but the point is that we need to start somewhere. We need to start making some kind of assumptions and making decisions based on the most probable outcome of what those look like. And that's what the plan does.
Yeah, in fact, this is a staggering number in this article. 84% of retirees want to better protect their savings from the effects of inflation.
Yeah.
84.
I'm surprised
that is
it's not
a big
100.
number. Yeah, I know. I think it probably is, right? Unless for that very few that are ultra wealthy,
Sure.
maybe not worry about it as much. But yeah, this is causing a lot of anxiety and a lot of stress. We see it when clients come into our office.
Oh, yeah.
Because they're stressing about this. I love the fact that it said more retirees fear the financial stress is going to impact overall health. And the numbers are going through the roof of how many feel that this is affecting their health. So this is real. This isn't some imagined thing that we all can just, think doesn't exist, right? We know that's absolutely not the case. So again, you have to have a plan. So please keep that in mind. And, inflation matters. Taxes and inflation will be the two biggest eroders of our money, period. And so do you have a tax plan and do you have an inflation plan? I know we've been averaging in our plans 2.5%, and that's been a decent number over the last 20 years. But again, some years like we've seen the past 3 or 4, that number would be low. And that's why we've seen Social Security get as big a COLAs as I've ever seen in my career. So again, this is something that matters. Everybody realizes this is an issue, and you need to have a plan for it.
Yeah, the plan, I mean, when you think about it, having control, just kind of knowing the numbers, that gives you the confidence as you move through retirement. But the two things we can't control are taxes, inflation. Those numbers are going to fluctuate. So you really need to have a plan that takes into account all of this. We often say that retirement doesn't happen in a vacuum. This is what this is. I mean, this is going to impact you, so make sure you're planning for it. Work with fiduciaries. Have somebody that you can lean into when it comes to this, and at least know, because I know a lot of you are just sitting on the portfolio and hoping that everything goes great. Everything goes well when you get to retirement. Why not know that? Why not know your numbers, but also add to those numbers to, counteract the taxes and the inflation that we're talking about. Now, to grab an appointment, all you've got to do is call our number. It is complimentary. It's no obligation. 866-668-3625. Maybe you've got a tax question. Maybe you've got a question on just adding a little bit more to account for the inflation that we're most likely going to see. That's 866-668-3625. Again, that number, 866-668-3625. So back to inflation, guys.
Yeah, I love this statement in this article. It says, although many retirees face financial challenges and stress, 64% don't work with a financial professional.
Amazing.
And 44% lack a plan for estimating expenses, calculating how much income is needed, and formulating a plan. And this statement, the next, is so crucial. The path to closing the retirement savings gap is paved with better planning, products, and access to advice. And it basically, so much of this is going back to the simple fact pensions have become a thing of the past, right? And because of that, you have to create your own, which means that's the 401k plan, right? Went from a defined benefit plan to a 401k defined contribution plan. And that takes a lot more direction and help as to how I can create income, right, Casey?
It really does. Yeah, that's. I mean, the responsibility of it has been shifted to the employee, right? That's what this really boils down to. And so, if you have a 401k, what that really means is it's on your shoulders to either figure it out or to find the right team to help you figure it out, right? That's it in a nutshell. And it blows me away that 64% don't work with a financial advisor. That's a really, really surprising number because that's really what you need, right? And maybe that sounds a little stilted coming from a financial advisor, but I'll just say it this way. Whether you choose to work with us or work with somebody else, you need some kind of help, right? If you need electrical work done at your house, if you're not an electrician, who do you call? You call an electrician, right? And that's a no-brainer. I mean, nobody would argue that point. And yet we have people trying to plan out a 30 or 40-year retirement who have never done it before, don't have a finance background, don't know the products, investments, choices, options, and ultimately the ramifications of those decisions, and they're trying to go it alone. And so that's why we're here every single week talking about having a plan and finding a team that you can trust to help you put it together.
Yeah, that's why if you're sitting out there listening today and you're anxious about what we've been talking about, inflation, taxes, what do I do about my income? Please pick up the phone and give us a call. We want to have a conversation. The main thing we also want you to know is you're going to keep your checkbook at home. This isn't going to cost you anything except some time. You've got to be willing to pick up the phone, give us a call. So if you've saved at least $250,000 or more, pick up the phone, give us a call. Let us have a conversation that may be a game changer for you and your individual situation.
All right, the opportunity is right here. It is knocking. You need to answer the door. Call this number, 866-668-3625. Again, 866-668-3625. If you've saved $250,000 or more towards your retirement, these strategies are going to work best for you. This is a complimentary appointment. Leave that checkbook at home. Find out if you're on track for your retirement. 866-668-3625. Or if you're already halfway down the path, get a second opinion. 866-668-3625. When we return on Elevate Your Wealth, more custom articles. We'll talk about why are so many retirees filing for Social Security, and they're doing it earlier. We'll talk about that coming up next. Welcome back into Elevate Your Wealth. Your hosts, Mark Stimpson and Casey Elkins. You can find them right here in Seattle. Elevated Financial Management. Check out the website. It is a wonderful resource, efmnw.com. All letters, efmnw.com. There are links to the TV show. You can see their pretty faces. And also, our radio shows are in podcast form. Check it out. And again, speaking of Mark and Casey, 42 combined experience years in this business, helping hundreds of their clients get ready for what is going to be their retirement. They are certified financial fiduciaries. I'm Morgan Patrick, and again, my pleasure to go back and forth, and we are diving in on some of the latest articles that really came to the attention of the advisors this week. And this next one, and this is Social Security. We're all headed towards Social Security, so this really piqued the interest. Why are so many retirees filing for Social Security earlier?
Yeah, and this is something that is very real. I'm going to talk about my own situation just a little bit. I filed only 2 months ago, and I wasn't going to do it. It's not like I needed my Social Security, but I did it because of some of the things happening. I was worried about possibly Social Security offices closing and not being able to file online. And I would have to go in and face that, prove my identity. So I did. I filed earlier than I expected, and that's what this article talked about. They had close to $300,000 or 300,000 individuals more than normal file for benefits, and a lot of it is because of what they believe was going to be happening in the Social Security system. The one thing I do want to maybe stress a little bit is, do we believe Social Security is in trouble from the standpoint people not going to be getting their benefits? Absolutely not. We believe it'd be political suicide, to want to, say that Social Security is going away. That's nonsense in our book. But I understand why people are maybe filing early. And so, again, this is something you want to have a plan for, a strategy, because you might have 401k money. We know if you're full retirement age, as far as Social Security goes, depending on the year you were born, that money's going to roll up from 66, let's say, to 70 at guaranteed 8%, right? And we know our accounts, our 401ks may not do that, right? So again, if you turn that on early, you may be forgoing a guaranteed 8% when we could use some of our other money to create the same income that Social Security would have been giving us and actually pay tax rate at the lowest rate you're ever going to see in your lifetime. So these are strategies that, by working with someone that specializes in this, could really increase your monthly cash flow. Because how many times do we say, Kate, it's not how much you have, but it's how much you keep. And so again, having a plan is going to help to maximize your Social Security, and you really need to work with someone that specializes in Social Security planning.
That's it. And I think really a big reason, there's two main things that come to mind as to why people draw early. Number one is fear, right? And so the article even mentions fear mongering. I referred to it as FUD on the show a number of times, which is fear, uncertainty, and doubt.
Yep.
And that really does. It drives people's decisions, because emotionally it's terrifying to think that you've been working for 40 years contributing to Social Security, and now it's just going to disappear 5 years into your retirement, right? And that was supposed to be your pension, essentially, right? So if that's the case, that's a really very concerning thought, and we get that. We're not downplaying the concern that comes with that, but what we are saying is that you cannot make the Social Security timing decision in a silo, right? It is affected by other things inside of your retirement plan. Now, if you don't have anything saved for retirement, it might even be more important when you claim Social Security, right? Because if you claim it early and that's your only source of income, you might really make a big mistake there. But the point being that if you've got other assets, 401ks, IRAs, 403bs, 457s, individual accounts, stock accounts, mutual funds, whatever it is, you have other assets saved for retirement, you don't want to make the Social Security decision in a silo and think that that is just this one piece and I'm going to make a decision because it's going to run out and that's that. You really need to consider how that affects everything else, or more importantly, how everything else could affect when you take Social Security and making that as beneficial as it can be. Not to mention, that can also affect others that are going to draw on your work record for Social Security, right? And how that plays in when you look at collectively for the family, how Social Security, if you have a husband and wife, when should the husband start? When should the wife start? Yep. What other assets are there? How does that affect the other spouse when one of them passes away? There's a lot of things to consider with this. And what we're simply trying to say is, what's the best thing for you? We don't know until you sit down and have a conversation about the broader picture. We're just encouraging not to make a singular decision without all the facts.
You're making really good points, and we've kind of brought this up before on past shows. Everybody's different. It depends on so many different factors. But it's almost like with Social Security, it's like our family history or the history of our friends where they took Social Security at a certain age, or my dad did it this way, my so I'm going to do it this way. They're not putting enough thought into it. It really needs to be customized. You really need to have a plan within your plan.
In fact, I want to read a paragraph because I think this is very powerful. It says, economists and financial planners urge people to look at Social Security as longevity insurance, Waiting to take a higher benefit will pay off if you live a longer life, particularly if you run the risk of outliving your savings. In fact, when you compare the cost of delaying Social Security, money you forego collecting, with the cost of buying an annuity in the commercial market, it's hard to find a better deal. And it makes a statement. You can't buy an inflation-indexed annuity anywhere comparable on price in the private sector than you can by just delaying your Social Security benefits. That is a powerful statement when you think about it. People look at that crossover. How many years, if they wait till 70, let's just use 66 as their full retirement age, that's 4 years that they don't collect that benefit, right? So how long does it take to recoup the 4 years that you didn't take your money? On average, we know it's going to be between 11 and 12 years. But what this article is saying, you got to look at this as longevity protection. My mom is 91, still collecting her Social Security check. So the longer we live, the better the option is if you did wait, right? And that's the question that everybody runs into and has in the top of their mind is, so many people think I'm not going to live long enough, so I'm going to just collect early. And for a lot of people that make that decision, it ends up being a pretty bad one.
It does. And I think, maybe the other way that you could look at this in just a broader scale is that we live in a world of optimization or maximization. We really do, right? I mean, we are not a good enough society. That's not who we are as people. At least that's not how I feel about myself. I don't think you guys feel that way. And I assume most of our listeners don't. If you look at how people are in our area, it's not just that's pretty close. That's good enough. I think we can roll with that. Why would you let your Social Security planning be that way? Why would you throw darts and hope for the best? That's not what we're trying to do here. There is a way to optimize it. There is a way to maximize it, but it takes a conversation to do it. And like I said, it really all has to play together, right? There are a lot of different tools in the tool belt, and we've used this analogy before. You want to use the right tool in the right application, and you want to play the right tool to its strength, right? Yes, you can beat in a nail with a screwdriver, but it's not the most maximized, optimized way to do it. And so when it comes down to it, plan the right way with your Social Security. Don't make a knee-jerk reaction and just take it at 62 because you can. Because there's other implications that come with that. And it more than likely, taking it at 62 is probably not the best thing for you. It may be for some, right? I'm not saying that it isn't for some. It may be. But how does it affect the other decisions that you're going to make? And again, we've used this analogy before too. It's like dropping a rock in a pond. When you drop a rock, when you make a decision and you drop that rock in the pond, it has a ripple effect and it affects all the other decisions that you have to make. And so pause for a second, have the conversation, become educated about it, and understand the implications of the decision that you're making so you can make the right decision and set yourself up to be successful in retirement.
Yeah, because I just got a phone call this morning actually from a client that I helped get set up in Colombia, and he was diagnosed with a terminal condition. I just found out just a couple hours ago. And he's moved back to the United States. They're giving him anywhere from 1 to 2 years now. And he had no way would we have thought anything like that was going to happen to Robert. And, the bottom line is it's scary. And but he is so thankful that he had a plan. And he said he knew that I was going to take care of him and his children. And he called just to make sure that he had everything set up now in a way that was going to protect his children. And I can't overemphasize how important a plan is.
And I think it's really important to highlight the utility or the flexibility of that plan, right?
Yep.
Because obviously the plan was not to get a terminal diagnosis just a few years into retirement. That's obviously not the plan. The plan is to have a much longer retirement and to do all these things. But there's always flexibility. There's always caveats, right? There's other levers that can be pulled. And so, we have that plan, just like a road trip, right? You're on your road trip, but if the road is closed, you have to take a detour. And right now, Rob's got a pretty big detour that he's got to deal with, unfortunately. And it's a terrible circumstance, but undoubtedly, that is a much easier thing for him to deal with, knowing that he has everything taken care of, that he is set, and that things are going to be executed the way that they're supposed to be when things do happen, right? When life does happen. And that's really what the plan comes down to. And so if you want to put that plan in place, You want to take advantage and put something together that's going to allow you flexibility in retirement, help you allay those concerns, deal with the anxiety, figure out income, figure out taxes, how to manage your investments, how to make decisions when it comes to Social Security and Medicare. All these things, these questions that are swirling around in your mind, this is your opportunity to do that. It's no obligation, completely complimentary. It's not us agreeing to take you as a client. It's not you agreeing to become a client. This is your opportunity to get a written, customized financial plan. Don't hesitate. Pick up the phone. Give us a shout.
All right, the number to grab one of those appointments is 866-668-3625. That's 866-668-3625. Again, complimentary. Leaving the checkbook at home. Get a better idea of how you're sitting for your retirement. 866-668-3625. When we return on Elevate Your Wealth, it's time for Retirement Scenarios. Back on Elevate Your Wealth, hosted by Mark Stimpson and Casey Elkins. Elevated Financial Management, where you can find them right here in Seattle. 42 combined years of experience plus. So, folks, it's a lot of experience all about retirement planning. They've helped hundreds of their clients get ready for said retirement. They are certified financial fiduciaries. I'm Morgan Patrick. I go back and forth with the advisors. And now we're to the scenario portion of the program. Now, these happen all over the country. Yes, even in Seattle. But they happen in New York. They happen down in L.A., happen in Denver. They happen all over the country. So when you hear one, you might say, you know what, that's kind of what I'm going through. But it's not exactly what you're going through. So take these with a little bit of grain of salt. If you have any questions about your own scenario, grab one of our appointments that are available. They're complimentary during the course of this show, and try to work out that problem, right? It is your retirement. You really want it to be working for you. All right, first scenario, Casey, we'll start with you. They bought some crypto during the 2021 boom, and now it's worth a little bit less. About 5% of their total retirement portfolio is what it's allotted. They're not sure whether to hold on for the growth, sell it for the safety, or just leave it as is. How should retirees think about risk and volatility when it comes to, say, a holding like crypto?
Wow, that's a bit of a complicated question, I will say. First of all, to anybody that this truly applies to, that bought crypto a number of years ago and it's gone well, that's awesome, right? I mean, you feel really good about that. That's great. I hope that you didn't put so much into it that it was like gambling, right? Because that's really what it was a few years ago. At that stage, right, it was kind of a red or black type situation. But, I think that crypto is around to stay, personally. I don't think crypto is going anywhere. I think a few years from now, the landscape of crypto will look very different. And I think that probably some of that volatility will subside. But as an overall asset class, I think crypto is going to be the most volatile holdings that you have, which is great when things are going well, but devastating when they're not. We actually have been working with a gentleman that has a very large sum in Bitcoin and has done very, very, very well. Yeah. And I mean, it's really impressive how well he's done. It's exciting. And it's changed the trajectory of their retirement for the future. But he took a big risk. He took a big gamble with that Bitcoin, right? So as far as it goes with risk and volatility, when it comes to crypto holdings, having a small piece of crypto in the portfolio, I don't think is a bad move. I don't think that's a problem. But that really does, you need to recognize that is your most aggressive set of holdings, right? Unless you're using like a stable coin of some kind, but I assume that's probably not what we're talking about. So, I think holding on to those assets, they're going to be mostly longer term plays. And here's the reality. It's got to be the same way that you do stocks. I imagine that you're not sitting at home scalping trades as a day trader on your stock portfolio, buying and selling this stock and that stock. if you're not doing that with stocks, which are more of a known entity than crypto, why would you try and do that with crypto, right? So it needs to be a longer term play. I think those decisions should be made from a value perspective, kind of the way stocks are, where we look at that and we look at the future valuation of the company and what the potential is for that crypto to be around for the long term and what they provide to the network and the utility of those types of holdings. And that's what's going to set you up for success. But ultimately, it is going to be your highest level of risk, your highest level of volatility. And that's okay, but it needs to make up a smaller percentage of your overall portfolio.
Yeah, I would just like to add, I think people that want to add crypto to their portfolio, it needs to be money that if you do lose it, it doesn't change very much of your overall, net worth. Because I think that's really what we're talking about. Because if you risk a bunch and it doesn't behave right, because I think Casey and I both own a little crypto, okay? But it's a very small portion of what we do, and it's always going to be that way, even for me. So again, I just, I'm careful about it, and I don't want, we don't recommend crypto for our clients overall. Now, we have some that own a bunch, but it isn't what we recommend in setting up a safe and secure retirement, right? It's not. It's going to be a way more speculative red bucket type placement of those funds, because in the long run it could end up being really good. But again, it can backfire too. So you have to be very strategic about using crypto in your portfolio.
Scenarios, and we get all kinds from all over the country. And of course, crypto is a big headline maker right now, and that might be something you're thinking about. But make sure you plan for it. And again, the guys are looking at it as you are investing in your future, and just be aware of that. And it is at this point pretty risky. All right, so here is the next scenario, and Mark, we'll start with you. They bought a 20-year term life policy in their 40s, and it's about to expire just as they are about to retire. So the kids are grown, and the house is nearly paid off, but they're worried about covering funeral costs or leaving something behind. Is there ever a reason to buy new life insurance late in life, or is it better to self-insure?
Well, this is a great question that a lot of us find ourselves in that are getting into our 60s, maybe early 70s. There is the belief that as we get older and our house is paid off and our kids are off living their life, that life insurance is not that great of an investment. What I would say to that is, depending on your personal situation, how much assets you have in other different buckets, you might say, passing money on to our children, life insurance is actually one of the best ways to do it because of the leverage that you can get. One of the big concerns is sometimes we can't qualify anymore. When we get into our 60s, we have health issues, so that becomes a problem, right? But if we can get it, it can be one of the best tools to pass money on because it's 100% tax-free. So again, it depends on the situation. Step up in basis on real estate or stocks is always a great thing that happens when we move money to the next generation. But life insurance very much has a place, but it's going to be dependent on your specific situation, right? Because if you can't get it from a health standpoint, well, then it's a moot point. You're not going to be able to qualify even if you did want to get it. So again, you need to have a plan, and sometimes we wait till it's too late, and then we go, I'd like to keep this. Get some more insurance, but then we can't get it, right, because we didn't do any planning. So again, it takes planning, but life insurance absolutely can be a very, very powerful tool that a lot of people tend to write off as they get older, and it may not be the best decision, on that insurance.
And again, like you said, Mark, it really is situational because everybody has different goals. Some people are simply not concerned about covering funeral expenses when they pass. They're not worried about leaving an inheritance. Everything is paid off, and they go, "Hey, whatever my kids get is great. It's gravy on top for them. I'm not overly concerned about it." But we have other clients that take the exact opposite approach and go, "Hey, my parents left me $500,000. I'd like to leave each of my children $500,000, and that's a goal in my retirement, right?" And that's absolutely okay. But there's a very specific way that we typically go about that if we can, and that's with life insurance, right? So it really is dependent on the individual circumstance. And now the scenario that you offered, Morgan, there was a concern of funeral expenses, right?
Sure.
Life insurance is not the most liquid way to accomplish that, right? There are other things that can be done where there would be a death benefit that would be a smaller benefit, maybe $20,000 or $30,000, that would cover funeral expenses, and it would be available within 24 to 48
hours.
24 to 48 hours of somebody passing, right? So again, the right tool in the right application, and that's why we're always coming back to these different points that make up a retirement plan: income, taxes, Medicare, Social Security, estate planning, investment management, all these things, because those are what cover all the goals that people have in retirement, right? And using the right thing in the right circumstance. So, buying life insurance at 60 sounds kind of funny, right? I mean, maybe that doesn't sound like the natural way to go about things, but the purpose for it at 60 is different than the purpose for it at 40, right? And so that might change the type of life insurance you buy and the quantity of life insurance you buy and those kinds of things. So it's worth a conversation.
Yeah, absolutely. Because if you're a business owner, there's another thing that buy-sell agreements, right?
Yep.
That can be very, very important. So there's, again, we just want everyone to understand your situation is very unique to you, but don't rule out life insurance just because you think you're too old, because that could be a mistake that you could end up regretting, especially our beneficiaries could end up regretting.
Mm-hmm.
Well, we talk about planning every single week, and it's going to be individualized, or the couple that's retiring, and there are so many different options. And when you come in for one of these appointments, I mean, they're complimentary appointments, you can talk about said options, and everybody's going to have a different outlook. Your landscape for your retirement different from anybody else's. Make sure you're planning for it. All right, last one. We'll hit this real quick because it hits on one of the articles we talked about today, guys. 67, Casey, to you, still working, and they haven't started claiming Social Security. Some friends are saying, grab it now. Others say, wait, they're torn. How should someone decide when to take Social Security when they are still working past their full retirement age?
Yeah, it's kind of like what we talked about earlier, Morgan, where this really has a lot to do with what your other assets are. So it's hard to give a direct answer on that. I'll say that if you're still working past full retirement age, it probably doesn't make a lot of sense to claim your Social Security now. We'd probably say wait at least until you retire, probably wait till 70. But again, it depends on your other assets and your income needs. And so that's where having a plan really comes in. You got to make sure that you understand how each piece is affecting the other.
Yeah, so if you're listening right now and you're really concerned about Social Security, when should I take it? That's causing some questions, right? What about my tax situation? We're not sure what's going to happen with the new tax legislation. How's that going to affect my overall worth? What about my income? We know that income is always going to be first and foremost, and most of you out there now are not going to have a pension. So if you're stressing a little bit about income and having it guaranteed, please pick up the phone, give us a call, because all we want to do is have a conversation. You'll leave your checkbook at home. Maybe you're getting ready to retire from Boeing, or you have already. Please pick up the phone, give us a call. Let Elevated Financial Management help.
Here's the phone number, 866-668-3625. Complimentary appointment awaits. Get on track for your retirement, 866-668-3625. Again, no obligation, 866-668-3625. Another edition of Elevate Your Wealth, powered by Elevated Financial Management, in the books. For Mark and Casey, I'm Morgan. We'll see you on the radio next week.
Investment advisory services offered through Foundations Investment Advisors, LLC, an SEC-registered investment advisor. The content provided is intended for informational and educational purposes only. The views, statements, and opinions expressed herein are those of the individual speakers and not necessarily those of Foundations and its affiliates. The information contained herein does not constitute an offer to sell any securities or represent an express or implied opinion or endorsement of any specific opportunity, offering, or issuer. Any discussion of performance or returns is not indicative of future results. Each individual investor situation is different, and any ideas provided may not be appropriate for your particular circumstances. Foundations only transacts business in states where it is properly registered or excluded or exempted from registration requirements. Registration as an investment advisor is not an endorsement of the firm by securities regulators and does not mean the advisor has achieved a specific level of skill or ability. No legal or tax advice is provided. Always consult with a tax professional. All rights reserved.